Welcome to First Trade, the show where we're educating new investors and traders. We recognize that some of us are experienced traders,
and some of us aren't. That's why we wanted to level the playing field and make the markets accessible to everyone.
Thanks for tuning in, and we hope you enjoy the show.
Yo, what's going on, everyone? And welcome back to First Trade, your favorite show for what is basically like a beginner trading show, where we, kind of take you along that journey of learning more about trading and approach things from, kind of a little bit of beginner standpoint, mostly for myself because I'm very much so a beginner. I have my co-host with me today. Michael, what is going on?
How we doing? What's up?
Not much. Just in the office about 15 feet away from you. And excited to record this episode of First Trade. Guys, we're learning about options today. And I've been waiting for this episode for a while.
I think this is the first time we've covered options, right?
Pretty much, yeah. And I've been, looking forward to learning about them for a while. I keep hearing about these, things called options. And I'm familiar with the terminology, but I'm not quite sure I actually understand the most of the things behind it, so calls and puts and whatever. So I'm excited to learn about it. Is that Luke's brother? That is in fact Luke's little brother, Michael, right there.
Do I get that every time I come on one of these streams? Dude, I think it's every single day.
Someone in the office called him Homelander the other day, and I kind of agreed with it. If you guys seen that show, Michael, how's your trading going? I know people are. Oh, Hugh Henny in the chat. What up?
Gang. Is that what his following is called? It's the Gamma Gang? It's pretty sick.
The Gamma Gang, yeah. We're gonna bring Mans on in just a quick second here. Michael actually can't stick around for too long, so we're gonna say bye to Michael, Luke's little brother, and bring on Mans in just a second. What are we covering today? You know what? Since we started a little late, let's just get into it. Basically, options. Yes. A little bit about Torchlight, that whole situation, and just a whole lot of learning about options, which I'm looking forward to, as I mentioned. So, Mans, and part of the Gamma Gang, should we bring him on?
Yeah, dude, I'm excited to watch this. Like I said, I got to jump for a call, but I will be going back and watching this episode. I can't wait to see you get into with Mans, dude, because we're going to do good. I'm pumped.
All right. Sounds good. Peace, Michael. All right, folks. Mans, what's going on?
What's going on, guys? How's everybody doing?
I'm doing pretty good. Looks like the chat is pretty pumped to see you. Excited to have you here, man. I'm sure you heard me a couple minutes ago, but I'm very excited for this episode just to learn a little bit about. So for the few people who don't know who you are, would you mind giving us a quick introduction, telling us a little bit about yourself?
Yeah, man, absolutely. So I'm a 24-year-old momentum trader. I've been trading for about 16 months now, 17 months, so about a year and a half. I started basically as like the meme trader during the COVID market. I dumped my stimulus check into Robinhood, started to look up like the tickers on Twitter and found Hugh Henny and swung UAVS and realized that there was a lot of money to be made. So started trading. And now we're here a year and a half later. Definitely trade more options now, but yeah. So,
hell yeah, that's awesome. No, I mean, so a lot of people obviously started when you did. I was a little bit later to that, probably like the next year. But I don't know, kind of an interesting way to enter the market. That's for sure.
Yeah, absolutely.
So there's one question we have to ask. Sure. Pretty much every guest on First Trade. Okay. Right. The name is First Trade. And so obviously you're like a year ago, so I hope you remember, but would you mind telling us a little bit about that first trade you entered into, how it kind of played out for you, and why you did it?
Yeah, absolutely. So my first ever trade actually was, I found Zach Morris on Twitter first originally. And I remember it was basically when everything was still shut down, like you couldn't go into anywhere, right? And the market was still, we were just coming out of the point where we were like halt down every day or like limit down on the S&P. Like the market was just horrible, right? Like everything was just, bottomed completely. And I remember Zach called tops, which was like an Euler play, I guess at the time, or like shipping play. And it was at like 8 cents or something like that. And I think I had like $500 in my Robinhood, and I swung that with him and made like 200% on it. And I was like, oh, this is awesome. But my first real trade ever was definitely the UAVS trade. It was like, I was on Robinhood, didn't have any day trades. So I decided, I was like, okay, like I have to learn how to swing. So my first real trade was UAVS. And I literally, like I said, put my stimulus check in, went all in on UAVS at like, I want to say like 79 cents or something like that. And ended up selling it the day of the like Amazon announcement and made like 300% or something like that. And
Jeez.
I know.
That's a good couple first trades. I'll say that. I when I first started, so I made my first trade on the first episode of this show, so maybe like 17 weeks ago or something like that now. And the market pretty much, okay, now I'm starting to turn green, but when I made that first trade, it's pretty much was like the first couple months is just like straight into the red, but that's fine.
I mean, that's how it is for most people though. It's like everybody gets, the beginner's luck phenomenon is completely real and everybody has it for a little bit. And then you go through a time where you're just fighting so hard, but you're red every day. It happens to everybody. So part of the process.
Yeah. I mean, I'd be curious to also hear about that. Like if you had that moment of like, where you had that little bit of luck at the starting, but then I don't know, shit got real at a certain point,
Yeah.
So I guess moving into like more of the option stuff, because I am excited to learn about that. Let's start on like a real baseline for those like serious beginners.
Right.
What in the world are options?
Right. So an options contract at its core is you're buying the right to buy 100 shares of the stock that you're trading. So for example, say you wanted to buy a $25 call for CCIV, right? What you're doing is you're purchasing the right to buy 100 shares at $25. So the way in which that benefits you is if the price of the stock moves higher than the option contract price, you basically can buy those shares. You have the right to buy those shares at a discount.
Lower price. Okay.
Right. And you could theoretically, like at its core, go into the market. You could buy, like, you have the right to buy those shares and then you could sell them for the difference, right? So if CCIV is at 26 and you have 100 shares, right, you would make, right, like $1 is the difference between the stock price and your contract, times however many shares you have. So, that's its core purpose of options, right? And, some people do that as a long-term investing strategy by buying contracts for 2 years in advance, right? Like if you think Apple's going to be $100 more than it is now, right? You could buy like, those are called leaps. So, it's a call, but for a year or two out or something like that. So that's its core purpose. But primarily what I do is I trade the contracts for the volatility. So I'm not ever exercising them or using them to buy shares. I'm just trading the contracts for the premium, which is what you're paying to buy that contract. So I hope that kind of makes sense.
Okay, I got the first part.
Right.
When you're talking about you're trading the contracts for the premium or for the volatility, what exactly do you mean by that? You say you're not exercising them.
Right. So when you buy an options contract, there's going to be a price. So for example, say the price of that CCIV contract was 25 cents, so you're going to pay everything in options is basically so if the options contract is 25 cents, right, you're going to pay $25 for that contract, right? So the reason there's a premium on those is because there is a chance that the stock price could be over that, right? So you're paying someone that owns those shares is selling those contracts, and in exchange, or, they're selling calls. So in order to do that, they charge you a premium, which is what you pay. And when the stock goes up, the premium of that contract also goes up. So when the stock goes up, you can sell it, the premium higher, if that makes sense, right? So when the stock goes up, the premium, the price of that contract also goes up. So they trade side by side. They're just more volatile because options contracts can expire worthless, right? So for example, if you bought a $25 call for CCIV this week, right, and it and it closed at 24.90 on Friday, then the contract would be worthless, right? So there's always that risk, and that's why there's more volatility in those contracts.
Got it. So you're selling the actual contract instead of actually buying the shares and selling the shares.
Right. So I'm not selling the contracts to people. What I'm doing is I'm buying the contracts when I think is a good entry, and then I sell them. I sell the contracts when the price of the stock goes up. Right. That's the main purpose.
Got it. So you're just making the difference in the premium then.
Exactly. 100%.
Cool. Okay. So why? I guess before we get a little bit too deep, I wanted to. Someone from the chat asked me to ask you about the Greek, so I definitely want to ask about that a little bit later. But before we get too far into it, I guess why? Like when you've been in this for a little over a year now, right?
Right.
So what made you want to go more into options? I guess what was the appeal there?
Yeah. So I guess this kind of ties back into your original question about a time where I didn't think I was going to be successful at trading or where it got really hard. But when the COVID market kind of slowed down, basically like in August, is when the penny market got slow. And that was the majority of what I was trading was lower cap stocks. And when that got slow, I started to have a pretty tough time. I had no clue how to trade in a slower market. I took a couple big losses. Eventually I ended up starting a small account challenge with like $20 that I had in free stocks from Webull. And I was like, I'm going to, try trading options. And the first ever options trade is pretty much what got me hooked. And this, I guess, ties into the, first trade theme. But I actually bought ACB calls the day after the election. So that was when we were still in like Trump is winning in Georgia, and, there was no clear winner yet. But I knew that the tide was trending towards Biden. And I was like, well, if Biden wins, marijuana, clean energy, and EV stocks are going to rip, right? And they're going to go up because a Democratic, president that's favorable for that industry. So I bought, it was a Thursday, and I bought ACB calls that were, I think at the time ACB was at like $5, and I bought $6 calls at like 3 cents. So they were almost worthless because it was almost Friday. ACB wasn't above $6. So there was a very small chance that ACB would get above it. Right. And I bought those in the morning, the day after the election. And that entire day, all the media outlets started to report that Biden was becoming the clear winner here. And ACB ended up running like 25% that day. And the contracts went up over 1,000%.
Oh.
And I actually ended up holding them overnight, and ACB went up another 30%. And I ended up making 7,000% on those contracts that I bought, which is still my biggest percentage trade date because, ACB went to like $8. So they went from like 3 cents to $2 for that contract. So I turned a $25 account or $30 account into 1,700 in 1 day. So I was like, all right, I guess I'm gonna, keep doing this. And that's kind of what I'm known best for, actually, is I had a real hot streak after that. And I ended up turning that $20 account into a little over 140,000 in about 3.5 weeks.
That's insane. Yeah. I mean, that's one hell of a way to get into options.
Yeah, absolutely.
Yeah, because I have it in my notes here. Being known for turning $17 into 36K in 2 weeks, which is insane.
Yeah.
So I definitely see why you're interested then. So obviously, like you mentioned, you touched on it a little bit. Like it's not always going to be able to fulfill at the like $25 or above. What are some of the other risks associated with, doing options? You always kind of hear about it being a risky thing, right?
Yeah. And I think when everybody gets introduced to trading, it's like, oh, options are scary because you hear these horror stories of people that end up like losing all their money or end up, right, all these crazy things because things can go south quickly. So I would basically compare options trading. It's similar to trading like penny stocks in terms of volatility. So like things move up and down really, really fast. but you're trading with that volatility on, larger cap stocks, like, mid to large cap stocks. So like $30 to $100 stocks, right? But the volatility is increased heavily, especially with options. You can trade, there are different expiration dates. So there are weekly calls, which are calls that expire this week, the week that you're in. Those are the most volatile. The week, if you go, the farther out you go, so you could buy calls for next month if you wanted to, right? Those are going to be way less volatile because they have less of a chance of expiring worthless, right? But they're also more expensive and less volatile. And I personally enjoy the volatility because if you know how to read a chart and you can trade relatively well, I wouldn't suggest trading weekly contracts for beginners because it's just going to be too stressful. If you're going to trade your first options contracts, probably shouldn't do it like me. You should probably trade contracts for like a month out. Start really, really small, like beer money, $100 or $200, whatever you can afford to lose, because you're going to lose more than likely. And practice and understand how they move and things like that. So basically the inherent risks are really just the fact that it can expire worthless and you can lose all your money, which is completely different from trading stocks where, if you own a stock and even if it ends the week down a few dollars or a couple cents or whatever, you still have value. Yeah. Right. Yeah. You still have value so that's the primary difference.
Okay. And that's, I'm really glad you touched on that as well, because that was going to be one of my main questions is, if you're how would you recommend someone try out options for the first time? Right?
Absolutely. I think our options are a fantastic thing to learn. Not only because it can help you make money trading, but it's just a good life skill to understand a different part of, the market. Right. So, if you're going to start options trading, like I said, I would maybe open up a separate account. So you're not tempted to use all of the money that you have in your account. Maybe open up like a cash account on Webull or something like that, and start with like $200 or something that you really, it doesn't even have to be that much. You could start with 100, and trade some mid-cap stocks that have lower priced options contracts, like Skills, CCIV, some of those names. A lot of the growth stock names are nice because people are familiar with them. But trade contracts that are maybe like 2 weeks out. So if you're on Webull or whatever platform you use, it'll give you plenty of options. It'll have all the dates, and start with, contracts that are a couple weeks out, and play in the money contracts. So you can play in the money or out of the money. In the money is going to be more far less volatile because those contracts already have inherent value because the stock price is over that price.
Got it.
So I would play in the money contracts for like a couple weeks out on, so if, say for example, Skills is at $19 or like $19.80, you could buy the $20 calls on Skills because they're, almost in the money, and then, just learn how they move and things like that. That's how I would recommend starting, and like I said, just don't start with a lot of money because more than likely you will lose it.
Nice. Okay. Yeah. Okay. I'm glad you touched on that too. So in the money, essentially, like say if you're buying something for $25, right? Your options contract for 25, right. Then, if the stock is like 24, then you're out of the money. But if it's 26, you're already in the money. Nice. Okay.
Yeah. So for example, like if CCIV right now is trading at 24 something, right? So the $24 call would be in the money. The $25 call would be almost in the money, but it's still technically out of the money. And then the 26, 27, $30 calls are all out of the money. And the more out of the money you go, the more volatile it's going to become, if that makes sense.
Got it. Okay. So real quick, so we talked about calls. What's the difference between calls and puts? And as like a little follow-up, how does that relate to shorting a stock?
Right. So when you buy puts, you are basically betting on the stock going down in price. So for example, I bought puts on Riot the other day, right? So if you buy like a $35 put on Riot, right? And the stock price, and maybe that contract is $1, so $100, right? And Riot goes to 31. That contract would be worth probably like $4 or $5, somewhere in between there. So you make money as the stock goes down, which is very similar to shorting in the sense that you make money, on a certain direction of a play. The difference that I personally like with puts versus shorting is with puts, you have a max loss. So like if you put in, $1,000 into a put, right? And the stock just rips and goes straight up for the next, day or two, right? You can only lose the amount of money that you put in, which is that $1,000, right? Whereas if you were shorting a stock, right, you theoretically could have unlimited loss, which is kind of what you're seeing in the market right now, right? With the whole GameStop fiasco and things like that, those are the really scary parts of shorting a stock with your account, because say you short a stock at $100 and it goes to 200, you can your account value can go negative and you can be in debt to your broker for the difference if you don't close out your short, you know what I mean? But that's the part that I like about puts, is that there's a max loss. So like, you're not going to have any horror stories of, owing your broker $100,000 for a bad short play.
Forgot to set that stop, huh?
Right. Exactly.
Yeah. Okay. So thank you for explaining that first off.
Absolutely.
And I know we're running a little short on time here, and I honestly have like so many more questions. I know in the chat, people are asking about, like I mentioned, the Greeks, delta, theta.
Right.
I don't think we have time to get into all that today, but here's my suggestion.
Yeah.
I'm going to go back and rewatch this interview, make sure I got every detail down. I'm going to go and I'm going to make my first options trade. I'm going to do what you said, the 2 week. And then, I don't know, would you be down to come on and dive a little deeper into options?
Yeah, absolutely. I'll come on anytime you guys want to have me. I'm happy to be here.
Awesome.
I enjoy spreading the knowledge about the sector, because I've learned and grown so much from it. So I'm more than happy to come back.
Appreciate it. Yeah, I'm excited to learn. I've been waiting to learn about this for a while. It's funny because I could have just gone and researched it, but I was like, I want to learn like on the show, so it's a little bit more authentic.
Yeah, and DM me if you need any help. Not MrManziel.
Absolutely. And speaking of that, I wanted to give you a second to just give a quick shout out. I know we got the Atlas gang in the chat. Shout out Hugh. Yeah. Shout out everyone in there. But if you don't know, where can they find you on?
Yeah, online? Man, absolutely. So you can find me on Twitter at not MrManziel. Instagram and TikTok is Man's Trades. Shout out to the Gamma Gang. That's what my followers have kind of grown into this really awesome community. So I appreciate all you guys for the support. And yeah, absolutely. Let's keep killing it.
Awesome. Well, thank you so much for coming on. That is about all the time we got today. But folks, thank you for joining us on First Trade. And we'll definitely have to go a little bit deeper into options. And we'll get Mans back on. In the meantime, go give him a follow. And that just about does it for our show today.
Thanks for having me, guys. I appreciate it.
Peace, everyone.
Welcome to First Trade, the show where we're educating new investors and traders. We recognize that some of us are experienced traders,
and some of us aren't. That's why we wanted to level the playing field and make the markets accessible to everyone.
Thanks for tuning in, and we hope you enjoy the show.